Welcome back. You're with us on Reporters Diary. Now, after months of uncertainty and speculation, Fortis Healthcare is finally on the cusp of a deal. Last week, the Fortis Healthcare Board had approved a binding proposal from Malaysia-based IHH Healthcare, which will invest 4,000 crore rupees via preferential shares, and that will be followed by an open offer for shareholders as well. Now, it had outbid TPG Manipal in that race. Nisha Podar and Ekta Batra, who have been tracking all the developments from that story very closely from day one, join us now with a very special guest. Nisha, Ekta, over to you guys.
We have with us Dr. Tansy Lang of IHH on this mega transaction announcement of buying out Fortis. Doctor, so good to have you on CNBC TV 18. First, congratulations. And I want to understand, what were the valuation drivers for buying out Fortis? And you had spoken to Fortis last year, same time as well, when the deal broke and you broke your exclusivity period as well with the company. What changed over time that you're now upbeat on acquiring the same company?
We have always been looking for accretive opportunities in India, because India is our fourth home growth market. So if you look at where we ended last year, there were a couple of issues we could not sort of get a grip on. I think one of the key things was really on the Daiichi sanctions on the shares. I think there was some sort of stay in terms of the execution of the sale of the shares itself. So because of that, at that particular point in time, we decided that we couldn't go ahead with the acquisition itself.
What drove the valuations to 170 rupees per share, and how much did it come down by because of the findings of the investigation report by Luthra and Luthra?
I think there were multiple data points. There was not one particular sort of set in terms of the data points. In terms of the multiple data points that we have, we actually triangulated. I think in terms of the performance from about a year ago, plus the due diligence findings, to the final audited financial statements in terms of the qualifications, I think the investigation that went into as a result of what was audited by the board, and also the fact that there were a couple of I think some of the qualifications, of course, we looked at. I think all of these factors, and also broader industry specifics in terms of the performance, led us to arrive at this particular valuation.
We do have a SEBI probe which is pending. We do have a forensic audit as well as maybe an SFIO probe where the details of that particular investigation is not known to the market or not known to anybody right now. Is there any condition that you have that if you don't like what you see, you can walk away?
No, we are committed to the deal. I think, of course, at this particular point in time, we are still subject to, our process is still subject to us going to the shareholders for their approval. And of course, the CCI, the Competition Commission of India, would also have to clear that. So these are the two main hurdles that is left. Okay. And yeah, it could be that when we sort of put up, I think the shareholders' approval is going to happen sometime in mid-August. So we're waiting for that. But okay. Otherwise, pretty much, if the CCI's approval is obtained, together with the support and approval, I think it was 75% of the voting shareholders present at the meeting itself, I think we're pretty much go ahead.
There is a possibility that there could be more medical devices which could come under health control or price control. Plus, there are a lot of issues and cases coming up with regards to overcharging. The Delhi government is coming up with possible price controls, etc., and many different kind of regulations and subsidies. So in that context, what is your strategy in India? I
think with this reset, so to speak, it would make the Indian healthcare market into a massive powerhouse and a platform for medical tourism to come into India and to tap on the huge talent pool of Indian medical doctors, surgeons, healthcare professionals, nurses, radiographers, allied healthcare support, as well as occupational and physiotherapists, and et cetera, et cetera. So generally, I think the increased regulation, the increased focus on the industry-wide would tend to produce longer-term benefits and results. And, as a corollary to that, if you look at where we are, we have never flipped any asset because we're not a fund, or, we don't have to sort of, have a 3x returns, in a very short period of time, because we are operators. All of us here, if you look at the senior management of our respective companies, all of us are managers. We're professional management. So whenever we go into a country or any asset that we merge with, we are in it for the long haul.
Right. So you accounted several reasons why you're upbeat on India, and while we still want to talk about the Fortis deal, can't help but ask, there are many other hospital transactions, assets on sale right now. There is Medanta, there is Seven Hills, and many of them. Are you also interested in others? You did make a comment very recently that you are focusing on brownfield expansion in India.
Yes. We looked at quite a number of the assets itself. Obviously, in terms of the geographies in India itself, where we already have our presence, we will not seek to overlap them, because obviously we are also worried about the short-term impact of cannibalization. So when the opportunity for Fortis came up, we find that it's actually very complementary to our current footprint in India, where we are today. We are largely concentrated in southeast of India itself. I think we have a hospital in Bombay, and another one that's yet to be completed coming up in Bombay. So the Fortis footprint, we find, is a very good complement to where we are.
You must have got enough time to speak to the shareholders, because their vote is very important for this transaction to go through. 170 rupees per share is the floor price for the open offer. Are you open to negotiation at all? Have the shareholders also put in a request, because there are certain banks who have converted the debt of the company into equity at a much higher rate than this?
Given the headwinds that's coming, we believe that this is actually quite a fair price. I think that given the fact that whatever we put up on the table itself is a premium to what the market price is being traded as today, I think we have offered a very holistic as well as a very simple solution to all shareholders, current existing shareholders in Fortis. I mean, for those who want to exit, we have the opportunity. We have given them the opportunity in an all-cash deal. And for those who believe in our story and who want to ride the upside with us, we would certainly welcome them to support us.
Are you going to put in more money once the deal is consummated? How much are you looking at for the ship to really stabilize quickly? So
our estimate is that the company needs probably something closer to 5,800 to 6,000 crores. Yeah. All right. Now, like I've said earlier on, we have also taken into consideration, because in a run-up to the offer, we have also taken into consideration the wishes and also the aspirations of many minority shareholders who said that they don't want to be diluted excessively at whatever offer price we put up, because they want and they believe that with us coming in, the price would be able to stabilize quite quickly. The other 1,800 crores, we believe that after the moment that we remove the effect of the leakage in terms of the rental paid to the RHT, the company's EBITDA will go back up, I think, in a steady state, probably some 500 crores a year. So that, and in terms of the restructuring of some of the deadlines, we would then be in a better position to leverage, up another 1,000 to 1,500 crores. And in the event that we can't do that, we always have the option to issue a rights issue.